And we're back. It's July 9th. Forex Focus. Paul Capetta's here. What's going on, Paul?
Not much, Frank. How are you, my friend?
I am good, just trying to get caught up. When I started at Tasty Trade, I worked directly for Tom and wrote, me and like a couple other guys wrote research segments and everything else. And the show would start at 7. And we were like supposed to, in a more organized and legitimate version of the company, we would all show up at like maybe 6 or like 6:30 and like prep all of the content, whatever. The important people that did the production stuff and mess with the cameras and everything, they showed up early to make sure that all of that stuff was working properly. And I would show up at like 6:50 on a good day, 6:55, run in there, be like, yeah, this is what the show is about. And then he would be like maybe 20% prepared and then would mostly like stumble through a lot of this stuff. And I feel exactly like that as I'm trying to read all of his research that Glenn put together for today's show. There's so many numbers, and it looks like he's done a solid job of highlighting for us some good takeaways, but it's going to be a bumpy ride. It's been a bumpy week. This is to say. Yeah. How has your week been?
Well, I was off last week, and then this week.
So you're well rested.
No. No, it feels like we've been working for a whole week, and it's only Wednesday.
It's wild that it's
Wednesday
only Wednesday
morning at 6:30. Yeah. No, but I've been good. Enjoying the weather, enjoying the summer. Got a good tan. I don't know if you can relate to that at all.
It's looking pretty good, and I can tan a little bit. Thanks very much. What did you do on your week off?
So I went to a concert up in Madison. Enjoyed the weather. It was hot. It was probably 90 every day. I felt like for like 3 weeks straight.
Yeah.
Played some golf. Did a little kind of spring summer cleaning in my apartment.
But this wasn't Summerfest though.
No.
Okay.
We're just Morgan Wallen, Cap Randall.
Gotcha. Was very cool.
Very cool.
Nice.
It was basically like if you ever been to a game up there, it's like a game day attitude. So
I haven't. It's funny. I've got like family who lives in Madison and like a couple of different places around like northern Illinois, Wisconsin area, and obviously Milwaukee's only like an hour drive from here, and then Madison's maybe like an extra 20 or 30 minutes from Milwaukee.
From here, it's probably about 2 hours.
2 hours? Okay. I have been there in my hockey playing days. We went to University of Wisconsin for like a tournament or something. Yeah. So I can remember like walking around the campus as like a 12-year-old and being like, this is really cool. Like they just let like kids kind of live around here and run the town. Yeah. And it's like, yeah.
Yeah, pretty much. Yeah. That's how it goes.
Well, that's great, man. Yeah, it's funny because Summerfest is going on at the same time. Yeah. I had not so much of a fun week, and yeah, the family that's in Madison, whatever, is on my mind because we had our aunt died. We had to go to had a wake and funeral, and my one cousin and his girlfriend showed up at the wake, and they were like, yeah, you know, this is like Sunday late afternoon, like 3-4 o'clock. It's like, yeah, we were at Summerfest last night, like, blah, 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 it was great, whatever. It's like, yeah, we're going again tonight, whatever. Like, he's supposed to be like a pallbearer the next day at the funeral. No shows.
Oh, jeez. Okay.
Summerfest must have been going too crazy. Yeah. But, yeah, it was just funny because he was, like, already looking pretty rough from the Saturday night festivities. And he's like, yeah, we're going to drive back up there, go to Summerfest, and I'll be back here tomorrow morning. And it's like, that sounds like a tough itinerary. Yeah. I wish you the best of luck. And wasn't able to pull it off. But respect, to my boys up in Wisconsin. Having a ball amid Summerfest. I still have never been. I'm sure it's a good time. It's not like a Lollapalooza type thing. Have you been to Summerfest?
No, I've never been. I think it's like a Lollapalooza.
But it's not. But is it all? But it's like weeks.
Yeah, it's like weeks, and it's spread out throughout Milwaukee, from my understanding.
Okay. Yeah, I don't know. Anyways, if you've been there or you're going, enjoy it. Let's enjoy some of the Wednesday price action. Some craziness yesterday. I'll show you the British pound. I am the worst person when it comes to navigating the news around some of this stuff. But I mean, this is 2 weeks in a row where they've really slammed this pound more than really anything else. I'm pretty sure we were down around 100 points. You can see the high to low range was more than 100 points. Got up to 136.40 yesterday pre-U.S. session, and then going into the U.S. session all the way down below 135.40. Now splitting the difference just below 136. Anything that you've seen on this pound front to warrant this one? We always talk about this. Obviously, these are going to be some of the most popular markets to look at, given the U.S. dollar being a part of them, and then other major currencies being the other half. And it seems like, if you're trading Forex or you've watched the show, it's really like every week or maybe couple of weeks, a new pair in this section becomes kind of the most volatile one. Mm-hmm. And it feels like the last week or so, it's been this pound. Is there anything that you're seeing? Because, you can see, or let me go. Yeah, this is back last week. They took this market down from above 137.50 all the way down to 136, bounced it back again to split the difference going into this week. But am I right to say that this is the most volatile one on the board, seemingly the last week or so?
Yeah, and I mean, the real news story is there's some fiscal uncertainty in the UK. I feel like we've been, once a year, we get something different out of the UK with regards to fiscal uncertainty. I mean, if you remember back in 2022, there was that kind of, it was almost, we could call it a flash crash, but it really wasn't a flash crash, where I believe cable traded down to about 104.5.
Super weird move.
It was like an overnight move. It was aggressive, and that was all on, I believe, a government budget plan that had all sorts of tax cuts, and the UK bond market kind of freaked out for a couple of days. It's a similar story now, and there's some kind of fiscal uncertainty again. We'll see what happens there. I mean, it's kind of hard to keep up with the news there. We have enough news going on stateside, so
that's why I try to just not keep up with any of it.
Yeah, that's kind of the story. Some dollar resurgence with the tariffs back on the table.
Absolutely,
so that's a good one. I mean, yeah, this yen one, we're no longer at 145, my friend.
It's crazy how strong the dollar has been in this pair. Because, I mean, even we just showed you the 15-minute chart of pound, and it's like, oh, man, dollar's on a nice run if you're just looking at the last 2 weeks. But we've really only come like 200 points off of the highs, and those highs are highs for the last couple of years for the pound, lows for the U.S. dollar. Now, you go over to this dollar-yen pair, and completely different story. One, you're seeing these dollar rallies or these sell-offs in the yen not being reversed by very much. Because we continue to see with that euro and that pound, we'll see like 50, 100-point sell-off and then like a 30, 40-point rally. Yep. And they don't really go anywhere from their highs, dollar lows. The dollar here in this yen pair, this hasn't been, in my mind, the most volatile the last week. As you can see here, yesterday's rally in the dollar, though it was, 50 to 75 points here, it was a little bit more calculated, a little bit more spread out, less violent than that 15-minute chart that we just showed you of this pound here. That's a pretty big and fast move. The dollar just continues to retain this strength against the yen to the point where, we're moving away from 145 again. We've done this before in the last month or two, where we've gotten down below 145 and then bounced back. You'll remember this 2 or 3 weeks ago, where they got up to 148 and then took this market all the way down below 143 for a second. But if you're navigating pretty much since the April crash in U.S. dollar, Paul, we're getting pretty far away from those dollar lows in this pair. And it is feeling like, to me, and I mean, it's not just because we're trading 146.75 this morning, which is obviously closer to 150 than to 140. It feels like we're a lot closer to 150 than we are to 140 in this pair.
Yeah, I mean, the technician will say that you got to break 148 completely, close the day above 148. That would be kind of your technical breakout signal. It doesn't mean they can't kind of head fake you there. That's always the thing I will exclaim about any sort of technical indicators. If you're looking for that breakout, it doesn't necessarily mean that it has to break out. This one's kind of a pure play interest rate differential. Japan hasn't really, I mean, I think they did one rate hike this year, I believe, and we really haven't gotten much more out of them. The U.S., too slow Powell, is that his nickname now again?
It is funny. I did think about it. Someone, like, there was like a meme or something somewhere, and just for reference, and I'm sure the production guys out there are like, wow, this is great stuff here, Frank. You didn't tell us that you were gonna be doing this, but it looks all right. This is the trajectory of U.S. rates for the last 10 years or so, and if you just let me fuddle through this, I'll show you Japanese interest rates as well. For the last 10 years, and you might say, oh wow, well, this is a nice move here. They're increasing, and you just showed me a decreasing interest rate in the U.S. They got up to 50 basis points and have pretty much stayed there for the last 6 months, and now it seems like have no intention of going any higher. And keep in mind, as we go back to that U.S. chart here, that yes, we're in the last year moving lower, but haven't been able to get lower than 4.5%. So 400 basis points on top of Japan. And then, of course, you see here it's Wednesday, so you're getting the weekend overnight funding. And so for that long dollar short yen, the carry trade is still pretty substantial in there. And it feels like the last couple of weeks, traders have kind of said, well, fear is subsiding in the U.S. for the time being, whether it's Iran, Israel, or trade war stuff. And so let's get back to the carry trade in here. And you've seen that drive this market up close to 147, maybe that 148 that they haven't been able to break out of the last couple of months. But yeah, I mean, you're getting 4.5 points via the indicative swap offer to hold that pair tonight.
Let's look at Aussie dollar.
You want to look at Aussie?
This one's been my favorite. I love when central banks don't cut rates when they're said they're going to.
15-minute chart. What the heck happened yesterday?
So the RBA, so the Royal Bank of Australia, did not cut rates. They held rates steady, but they were projecting a rate cut. So you saw basically real Aussie strength. The actual one of the bigger moves is actually Euro odd. It trades in Aussie dollar. That's why you're going to get a kind of a bigger move onto this one. So yeah, this one, a real aggressive, about over 100-point move on that.
Jeez.
On that announcement. They took some ground back, but really not, I mean, not that much. I mean, we're pretty much on the lows. They took some ground back in Aussie dollar yesterday.
Yeah.
They kind of reversed that one. So that one was an interesting kind of two-way action trade of the day yesterday, but that one will be interesting to watch with the FOMC minutes later today.
This is a different flavor of what we've been talking about. I'll go back to Aussie USD here. It's been decently volatile, probably right up there with pound. These two being some of the most volatile of the last week or so, but in a different way. This one, it seems like every time they try to rally it above 65, 66 cents, they just slam it back down to where it's been trading. even to the point, I mean, you can look at the last couple of weeks. You see plenty of these rallies trying to get up to 66 cents, and each of them sold off, back to the mid 65 handle, and recently here, the start of this week, below 65 amid some of this U.S. dollar bullishness. Now, you look at this here yesterday, they're expected to cut by 25 basis points. They don't cut, and you have a rally back up again, close to 66 cents. All right, fine, that was a little too much, but still a nice rally here, 65.50, 65.40. And then now you fast forward to today, and even with one of the most seemingly bullish signs for a currency, which is our central bank is supposed to be cutting, but actually we're gonna hold, is a hawkish central bank meeting. They can't build in any ground. It's been really rough for this Aussie and this New Zealand dollar to hold any gains against the U.S. dollar. If I go to the daily chart, you'll see very different than the daily chart on that pound or euro that we've been looking at, not able to get up to highs for the last 6 to 12 months of trading. And here amid these highs for the last couple of months, again, just not able to get above 65, 65.50, definitely not 66 cents, but some huge moves. And yeah, love to see central banks not doing what was forecasted because it's so rare.
Yeah, it is rare. I mean, I think we're 4 or 5 years now in the U.S. since.
I don't know if we've gotten a surprise yet in our trading careers. But that's all good stuff. Let's go over to the slides and take a look at what research we have cooking here today. Back-tested symmetric risk and reward in trending U.S. dollar pairs. Holy smokes, this will be a fun one. I think you have looked at some of this stuff, or did you watch the guys take a look at some of this research yesterday? Right off the bat, what are we looking at? What's the story today?
Glenn's done some great work. Obviously, he's been crunching some numbers. I gave him some pointers on what to tweak, because I was interested in what he would get. But no, we're gonna look at kind of they're just kind of like following the trend, which is like a momentum trade, versus a kind of a contrarian. Which is probably you and I are a little bit more contrarian when it comes to trading. But yeah, we're going to look at what the data tells us, what to do.
Gotcha.
And then Glenn has built in some parameters as kind of a trading setup for it. Very
cool. Yeah, I'm interested to see what this risk reward means. I have to imagine that he's kind of messed around with some like theoretical take profits and stop losses, which of course you can do in the platform and is a nifty little tool. Year to date, the US dollar is vastly underperforming, but over shorter time frames, all dollar pairs see two-way price action. And yeah, even this USD CAD pair, which has seemingly been just one-way price action since April, you've gotten your bounces from 138 to 139.50, your bounces from 137 to 138, from 136, which has been the low. Now, a couple of times you've seen a bounce back to 137 or 138 here. And each of these bounces, you've seen a few days in a row in that direction. How can we identify moving markets? Do contrarian or momentum strategies work best? We have a study for you here, Paul. The last 5 years plus, going back to 2019, looking at high, low, open, close data for these major pairs with the US dollar, that's euro, pound, yen, Aussie, CAD, Swiss franc, and Kiwi, filtered for 3 consecutive up or down days for each pair as trade entry criteria. Okay, so if you got 3 days in a row to the upside or to the downside, then we entered a trade. Simulated trade performance with symmetric risk-reward targets and a 5-day max holding period. Okay, so essentially looking for a specific percentage target, let's say 1% on each side of my entry, and then if I didn't hit one of those stop loss or take profits, then at 5 days they just close the trade. From there, it calculated the win rate, the average P&L, and other performance metrics. Okay, this is a fun little study. There's a lot of data involved, but it's not as scary as I thought as I was trying to prepare for this 5 minutes before the show. Looking here, Paul, at the numbers for 1% profit targets in the momentum direction. So this would essentially be if in any of these pairs from 2019 until now, there were 3 days higher or 3 days lower. If the pair was moving higher for those 3 days, the study here would enter a long position and look for 1% profit or 1% loss from there. If it was moving 3 days lower, they'd enter a short position and look for 1% profit or loss in the same direction. And what we have here, if I'm going to start by looking at just that win rate column next to the symbols, the momentum trade, Paul, has not consistently been a more than 50-50 type trade. I wouldn't call it high probability from what the win rates are saying.
Yeah, I mean, it does make sense because when you get kind of 3 up days in a row, there is a chance for a reversal. We talk about reversals all the time. So it's not surprising. Dollar yen being the one. I mean, this one, you have the 2022 grind higher, which was seemingly every day it was up 100 points. So
definitely the most trending market of any of these. If you were just to pull all of them up on a daily chart from 2019 until now, you would see that one has trended the most in one direction. Interesting to see that that's dollar Swiss franc would be the other one that is trended in one direction over the long term. But over the short term, actually, you haven't seen a continuation of those big moves. And so, expecting 3 days and then another day or a couple of days in the same direction has not paid off when you're expecting 1% profit in here. Now, looking at the same kind of setup, but contrarian, 3 days lower, study gets long, 3 days higher, study gets short. You're seeing higher probabilities. First of all, you got the win rates there, and it seems like from 2019 until now, much more likely for these pairs to reverse. Now, when you're looking at that profit target hit versus loss target hit, it is nice to see that is edged pretty significantly in a number of these, except for that dollar yen pair that we just looked at. On the profit side of things, and the average P&L has been, I mean, it's nothing crazy, but I mean, to have an average when you're only looking for 1%, Paul, on either side, and of course you're going to take a lot of losses from 2019 until now, committing this study, an average P&L of 0.07, 0.09, 0.1, pretty good edge in that if you're on the contrarian side of this study.
Yeah, and you're also waiting kind of 3 days for it to happen, like 3 days of consecutive moves. We don't get that a ton Forex, so I'm gonna have probably Glenn do a little 2 day, see what the 2 day is, and see what the 1 day or 1.5 day is. Is there an optimal number of days we have to wait for it to be up or down? That would be interesting. Obviously, you can go way in the weeds on this,
but that's the fun part of this, and what the Tasty Live has really built their reputation on is like, let's take a look at all this data of setting up this option strategy or this future strategy or here Forex strategies, and of course the past results are not indicative of what is going to happen tomorrow or next week or whatever, but it's one of the best indications of like, what can I expect? Not necessarily like, now I know that I can, always short the pound after it's been rallying for 3 days and I'll always win. That's not the case. It's a 54% win rate. And again, this is past performance. But again, like I would rather use this to help identify what I'm expecting if the pound is rallying a bunch, and it's like, all right, am I a contrarian? Am I a trend follower? Should I be looking for 1%? Should I be looking for 0.5%? Should I wait another day? Should you start messing around with these numbers, and then you start to see historically, at least, what has been optimal and how these might act moving forward. Again, we have no clue, but these are pairs that have been traded for decades, Paul, and thankfully we can sift through the historical data and get some semblance of what's going on. Really quick, he just took a look at essentially chopping those profit targets in half, and you saw a little bit of a better win rate here for the momentum traders, and so maybe there is something to, if I'm trading momentum, a smaller expectation, not expecting like, oh, this thing just rallied for 3 days and I'm going to take it for another 1% or 2%, but expecting it to move a little bit more in that momentum trade has panned out a little bit better. You see the win rates, a few of them now north of 50%, a few of the average P&Ls in the positive direction. And if you're expecting smaller profits and losses for that contrarian trade, pretty similar results here. Maybe it just reduces some of the potential risk in that trade, obviously, and the time that you're in that trade is a little bit lesser. But here are your takeaways, Paul, and we're going to get out of here. Symmetric risk-reward strategies are generally close to 50-50. Using 1 week trading periods, mean reversion strategies across all pairs have a slight edge over trend followers. The pound has yielded a slight edge for contrarian traders. The yen has been a little bit more of a momentum trade back since 2019. The 0.5% profit target is much more likely to be hit than 1% over 5 days. Makes sense. And even with tight profit targets, most trades take more than a day here in Forex. Fun little study.
Yeah, a little systematic.
Always
something
good
to think about.
Always good to get some data behind what you might be doing. And with that, we will send it to our good friends Tom, Tony, and Vanetta. Tasty Live coming up next.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.